Get to Mark Fuchs, Chief Executive Officer, CEO at Fuchs Capital Partners, joining us here live on set. Mark, good to see you again, and good morning. Welcome back.
Good to see you.
Yeah, well, last time we talked, you were in the process of setting up a fund, Southeast Asia-focused, equity long short. What do you think of SEA markets right now?
Well, I mean, Southeast Asia, medium term, we actually like because it's actually less correlated to some of the G7 impacts.
Okay.
In terms of it's a more domestically driven, consumption-led economy, we think that there are some medium-term trends that actually need to be mapped.
Okay.
One of the themes that we've tried to focus on is the second derivative of China and India. And what we mean by that is the impact of the regional impact of China and India's growth, whether it's in tourism, whether it's in FDI. The bottom line is that these economies, medium term, are going to expand, China and India, and they will probably, in the same way the U.S. went to Mexico and Latin America over time, will probably look in parts of Southeast Asia where labor costs are lower, resources are higher, and arguably as the RMB appreciates, they will need cheaper manufacturing bases, which ASEAN may be a target.
Okay, it makes sense to me, a medium-term story, but you got to be thinking immediate term. We've had these numbers out of China. It is breaking very sharply. Some people are calling 7.5 by next year. More worryingly, on the ground, you've got thousands of layoffs. It's not a hollowing out of manufacturing in southern China. It's almost a collapse. So, Southeast Asian markets, this is China's supply chain, so you got to be slightly worried, no?
Yeah, and the bottom line is that as a hedge fund, we're a little bit at an advantage to the extent that we can actually go short as well as long. And so we would probably be trying to map both the short-term impacts and the medium ones. The short-term ones are clearly detrimental. You've got major outflows of capital. You've got higher costs of capital because basically you've got a lower P's, so anyone who's raising equity is having to raise much higher prices. Anyone who's raising debt, the CDSs and the cost of debt now is 16% on CDS for medium to smaller companies, 4% for bigger ones.
Okay, all right. I got to ask you here. I mean, you're a hedge fund guy. The Morningstar 1000 hedge fund index down almost 9.5% in October. That's the worst on record. These are not good times if you're running a hedge fund here. You're equity long short, but isn't this more time for global macro, or if you want to trade vols?
Well, I would encourage anyone who's investing in any of these funds to just focus on what people are specializing in. One of the things that we've tried to do in ours is that through focus, hopefully there's performance. And I think there was a lot of style drift throughout the last 2-3 years where it was relatively easier to make money, and people probably went beyond their core competencies. So I think for people who know macro, that's a very valid strategy, but I would very much encourage people to stick to what they feel they may have an edge in.
And don't discount equity long short.
Come in here quickly. From a sector perspective, commodities, is it looking like a challenging trade at the moment, given all the dramatic price falls that we've seen? People finding it very difficult to call a bottom at this stage in the markets?
Well, yes and no. I mean, remember that particularly in Asia, commodities are a relatively higher part of the total cost of input when you're producing a good, whereas, say, in the States, labor is a much bigger part. So for those companies that use commodities as inputs, their margins are actually going to improve, notwithstanding the external shock on demand medium term.
Okay, Mark, we'll come back and talk more in just a bit. Mark Fuchs there, CEO at Fuchs Capital Partners here on set with us. Next up on Squawk this Wednesday, we're going to take a look at the business of fuel-efficient cars and how Japan's battery makers are playing their part after these words.